Hello there, it's Bernardo here. Welcome to another Unsubjective Reality video. Now, in today's video, I wanted to talk about the process of pitching a startup, formulating a pitch, and delivering it. How to do that the most effective way possible, coming from somebody who has done this quite a bunch of times. And I wanted to share some things that have worked for me as I've repeated this process. And this goes for not only pitching startups, but if you're at work and you need to pitch an idea, you need to pitch a project, or you need funding for something, um, whatever it is. If it's something that you have to pitch and that you have to convince somebody to buy that idea, buy that business, or invest in your business, this is a guideline that has worked for me, and that I think it's pretty good. It's pretty concise, and well, from my point of view, has a very solid chance of working and giving the best results for somebody who needs to deliver a pitch. I think the first thing to keep in mind when you're pitching your startup to a possible investor is that you have a very small window of time to convince them to even consider investing in your company. It's a very small window. Usually it could be from 30 to 60 seconds from when you start your pitch. You really have to get that investor's attention and really try to get through to them that this is something worth their money. This is something that's worth um, their time and their investment and their expertise if they're going to be an active investor who's actually going to help steer your business in the right direction once they make that financial investment in your company. So that's something to keep in mind. You have a very small window of time to get that investor's attention and keep them engaged in your pitch, and plant that seed in their head that this is an idea worth investing in, or this is a business worth investing in. That being said, the first very important aspect of a good startup pitch is the hook. What you're going to say in those first few sentences of your pitch to really grab that investor's attention and get them engaged with your presentation and your pitch, and plant that seed in their head to make them think that it is a good idea to invest in your business. And that starts with the problem that you're solving, a real problem. Your first few sentences have to get through to that investor and have them think in their own head, wow, yes, this is a real problem and it needs solving. And that is the first message that you're trying to get through to them, in the beginning of your pitch, in the hook. So the hook is a very, very important aspect. So make sure you work on it real closely and pay a lot of attention to the first few sentences of your pitch and how you're going to present that problem. Make sure it's something that makes the investors scratch their heads and really um, touch on that attention grabbing points that you're going to present right at the beginning to really make them think and engage them from the start. The second part is the solution, which of course is your startup. Right after you present that real problem, you got to follow up with how your startup is the only solution to that problem. How are you going to solve that real issue for many, many people who would be clients of your business, or who would be interested in using your business to solve their problem? How are you going to solve that problem? So, very important to formulate your pitch in a manner that shows your startup as the only or best solution to that problem that you just presented to the investor. That's going to get them even more engaged and excited about what you've built, and it's going to open their ears up even more to the following steps of your pitch that you're going to present to them. So the third part of your pitch is going to be presenting the market size. This is very important because investors want scale. That's one of the main worries of an investor before putting their money into a business, is how can you scale this business over time. So when presenting your total addressable market, if it's in the billions, that is dream scenario. If it's in the millions, great. But if you have a business that could possibly reach billions of people, billions of clients, that's even better. But you want to make sure that you have a very sizable total addressable market so that the investor can get excited about the possibility of scaling this business. The next part of your pitch is going to be talking to the investor about your traction. Data is king. It's very important, and the more data you have, the better off you'll be in the investor's eyes. Showing revenue, partnerships, milestones that you've already made prior to this investor even putting their money into your company is very important. Anything showing some real momentum for your company, what you've accomplished so far, and it really shows the investor, okay, without your money, I've already done this. With your money, I can do all these other things. It's how that money that the investor is going to put into your company is going to enable you to grow even further and reach new heights with your business. After that, you're going to want to talk about your business model. How do you make money? How do you generate revenue? And for this portion, you want to keep it very simple. The more you overcomplicate this, the more it's going to raise questions from the investor. So it's very important to keep this part very concise and very clear. Explain how you're going to make money, how you're going to monetize this business, or how you're already doing it, whether it be through subscriptions, whether it be through fees, whether it be through one time or recurring sales. You have to explain this in a very, very specific, but at the same time, simple manner to show the investor how you're going to monetize your business. After you talk about the business model, you're going to want to present your team. Talk about the team of people that are going to make this idea or this business that's already running come to life or scale and reach new heights. Of course, having a great idea or a great business already running, a viable idea and scalable, a good product is very important. But you got to remember that the investors are also going to look at the people who are going to make this happen, who are going to make this investment generate the returns that they're looking for, who are going to make this business come to life and actually make an impact in the market. So the team is extremely important. The investor can like your business all they want, but if they don't trust you to get the job done, they're not going to invest in your company. You have to present your team and yourself, showing professionalism, showing enthusiasm about your business, showing belief on it, and really show that you know what you're talking about. So to get that investor even more excited in your idea, but most importantly in you, because at the end of the day, they're putting their money in you. You're gonna, take care of that money or use that money um, to really turn this business that you have or this business that you're building into something even bigger. So, it's really selling yourself, showing that you're capable of taking this business to the next level, that you're a trustworthy person, and that you're more than capable of making this happen, that you're fully committed to this business and to this idea, and that you're ready to make this business a big time business or turn it into a reality. And of course, nobody achieves any real success alone. So having a team of equally capable and highly skilled people next to you, and that share that same passion and that same vision for this business is also very important for the investor, because he's going to look at a concise and united team who's going to take this idea and this business to new heights and new levels. So selling yourself and your team as well, or even better than selling your business and your idea, is key in securing that investment for your company. And the last but not least part of the pitch structure itself would be the ask. That's the part where you tell the investor how much you're raising and how much equity in the company you're exchanging for that capital that's going to be invested in your company. So you want to make sure you close strong, and you want to make it clear to the investor what those funds are going to be used for in your business. As a general rule, investors want to see most of that money that they're going to be making available to your company going towards the company itself. If you're inflationing your own salaries and your employees' salaries, and the investor looks and sees that most of the money that he's going to be making available to your company is going towards paying salaries, their appetite for investing in your company is going to decrease significantly. So you got to make sure that most of that investment money is going towards investing in the product, investing in the company, whether it be developing an app, whether it be developing an AI solution within your platform, whatever it is, whatever business you're in, you want to make sure that those funds that you're raising are going towards your company, not your own pockets or your employees' pockets. So, as a general rule, investors really want to see that when you're showing your ask. And it's also an opportunity to close strong and really show that investor why they should be investing in your company rather than investing in anything else. Really, a chance to show them why this is a great opportunity for them and why they want to be on board with your idea and your company and your business, and a chance to deliver a very strong finishing sentence to your pitch. Next point I wanted to touch on is the delivery of your pitch. We've talked about the structure. Now I wanted to elaborate a little bit more on the delivery. You want to sound professional. You want to sound like a businessman or businesswoman. You want to sound like an entrepreneur who knows what you're doing, who believes in their idea. You definitely don't want to sound like a clown or like an adventurer. So it's very, very important that you have a good delivery of your pitch. I think that all starts with confidence. You want to be confident, but not arrogant at the same time. And I think the most important part of that is being assertive. If you sound unsure, investors are going to think that you don't even believe in your own idea. So you have to be assertive when talking about your business. and you have to show that you know what you're talking about. So you have to be assertive and show enthusiasm and knowledge about your business. I think another point to be aware of is the jargon. You know, if your pitch sounds like a tech buzzword salad, you know that's trash. You know, investors are going to see right through you. You know, most of them have been in business for a long time, so they're going to see right through you if you're throwing in, you know, if your pitch is a word salad about maybe stuff that you don't even know yourself what you're talking about. So keep it simple, keep it concise. Of course, knowing your terms and knowing your terminology is important, but you don't want to overdo it because then you're just going to sound like a clown. And then the final point I wanted to touch on about the delivery are the short sentences. You know, you don't want to over elaborate. You don't want to give yourself the chance to start rambling and to start choking really when you're delivering your pitch. So, you know, keep it concise, keep it short, straight to the point. Don't elaborate too much and you know start confusing yourself when you're pitching. Um, and another thing that is extremely important when delivering a startup pitch is to be ready for anything. uh, like I said, you have to be mindful of your investors time. If they're willing to put in a large sum of money into any business, you got to assume that they have a lot of stuff going on. They're successful people, so you have to be respectful of their time, and you have to go in expecting it to be a short pitch, or that you're going to have a limited amount of time to deliver that pitch, but you have to be ready for anything else. I, for example, was delivering a pitch once, and I used this specific guideline that I'm talking about here to build my pitch. But then I presented the pitch, and then the investor started asking questions, and it ended up being a 4 hour meeting where and you got to be ready for anything. There are going to be curveballs that they're going to throw at you. They might walk out of the meeting for a second to solve something and then walk back in. That happened to me on this meeting. And you have to be ready. You have to stay locked in and focused throughout the entirety of your pitch, no matter how long it takes, and no matter how long you're sitting in an office, you know, face to face with an investor. You have to be ready for the curveballs. And I think something that goes along well with that in your preparation to deliver your pitch is anticipating some of the questions that they might ask. You know, some holes maybe that they might see in your pitch. You have to think of those beforehand so that if these questions do arise when you're delivering your pitch, you're ready to answer them without mumbling, without rambling, and and you know exactly what you're talking about. So definitely putting yourself in the investor's shoes and you know making that critical analysis of your own pitch is very important, and it's going to help you out a lot during game time when you're delivering that pitch. And the investor might start asking questions that maybe you didn't think of, or maybe you don't know how to answer. And of course, I think honesty goes a long way. If the investor asks you a question that you don't know the answer to, just say that you don't know and that you'll get back to them with an answer later. It's better than lying. It's better than making a fool of yourself and you know just choking and when trying to give this answer that you don't really have. So it's important to be honest too, I think. But in order to avoid those moments where you might get caught red-handed or you might get caught not knowing what to answer, try to anticipate some answers or some questions that these investors might make, so that when the time comes, you're ready for anything, you're ready to give any answer, and you're ready for any curveballs that they might throw at you. And again, be ready for any circumstance. Be ready for a super short pitch, be ready for a normal length pitch or meeting, and be ready for a super long one. Like I told you, this one that happened to me, where we were in the room for hours talking about it. And because I prepared, I ended up doing very well. But if you don't prepare, you're prepared to fail. It's cliche, but it's completely true, especially when it comes to pitching a startup. And I think to end, some mistakes and some traps to avoid when you're delivering your pitch, some things that you definitely shouldn't say. I think the first one is saying that your market is no competition. I feel like if you say that to any investor, they're going to think, well, if there's no competition, then there's no relevance to this business that you're in or this market that you're in. Um, Unless this is a revolutionizing idea or a scientific breakthrough or something like that, more often than not, you're going to have competition in business. So I think by saying that you have no competition, the first thing that's going to trigger in the investor's mind is, well, if there's no competition, then there's most likely no market. So that's definitely a mistake to avoid there when delivering your pitch. Another thing is if you have no traction. Unless you're a super early stage startup and you're still in the developing stage, having traction is huge. Because if you have no traction on your business, you're pretty much asking that investor to gamble. So proving your business concept is extremely important if you want the best chance at succeeding on your pitch and securing that investment for your company. So traction is very important. And then last but not least, overhyping your projections. Of course, there are going to be projections that may or may not come true, but you don't want to overhype them. You don't want to make it seem too good to be true, because for anyone that's business savvy at the slightest, something that's too good to be true usually is too good to be true. So by overhyping your projections, that's a surefire way to scare the investor away from investing in you and your company. So yes, that brings us to the end of the video. This is this guideline for pitching has worked for me over the years, and it's something that I use to this day. And I hope that you can get some value out of this. And yeah, we're going to be doing some more pitching content here soon, and more videos about delivering pitches or doing market research, all that stuff. I plan on doing more videos on. So if you like these videos, subscribe, and we'll see you on the next one. Thank you very much, and always forward.